this is Jennifer J. Hammond, and I'm so excited. We have the amazing, the famous Aaron Chapman with us today. Yay! Welcome to the show, Aaron.
So you're amazing and famous. I'm working on those. So I'll let you keep perpetuating something that we have yet to achieve. But thank you for pushing like that.
Oh, I think you already have those. And they're just going to get more and more millions of people to know you. But I would say that you have achieved those. But
Thank
and that's
you.
one of the
I
things
appreciate that.
I do. I really do. I mean, there's so many people that know you, and you've really made an impact on people because you care so much. And you're in, I guess we want to say in the numbers field, you're in the mortgage industry, but you also, I want to say you're just not the average numbers guy. You're not the average mortgage person. So I would love for you to share about your story and your why. You have a very powerful story.
So the story is why and all that stuff. I find why to be a really, really interesting question for people to ask and say, well, what's your why? And what's really funny about that question is I'm in a lot of events, you're in a lot of events, there's a lot of people up there speaking when people ask you why, and well, they want to say, well, this is my why. They want to show a picture of their family and all that stuff. I'm sorry, I'm calling bullshit, guys, that's your freaking why. I don't get there and shake my ass because of why. I shake my ass because of the contact that I have, the expansion of my business, the expansion of my influence, the expansion of my phone book, if you will, if you want to call it that, the contact list, and just the experience that I get from people. Now I take that back to my family, but in reality, they're not the why, because the why is what moves you all the time. My why, if it was all about them, I'd just stay there with them. But we can't. Our why is something else. I can't accomplish anything just sitting around my family. Now, back in the old days, if I had a farm, yeah, probably. Right. And what's your why is to feed them. So you kick their ass out of bed and come help. But we don't have that anymore. So, in reality, it's what drives me more than anything is to be the best at what I do for the sake of the people who refer the business to me, period. Because when that person refers business over to me, and I'm a real estate investment finance guy, I've been doing mortgages since 1997. I got into this from a whole different round than what most people will get. But what keeps me doing what I do and why I do what I do and why I focus on what I do is because when a person drops my name, like you, Jennifer Hammond says, you need to talk to my guy, Aaron Chapman. That means a lot to me that your name got stuck next to mine. So I got to make yours look better because they talk to me. If I suck, that means you suck. And I can't have you suck because you brought my name up. So I have to push hard all the time to make sure that anybody who refers me now looks like a rock star because of what we did after they had made that referral. So that's truly my why, is to ensure that everybody around me looks better than what they did the minute before they said my name. Because if they don't, there's a freaking problem. I got to fix it. Now, how did I get into this shit? So I started off cattle ranching in high school. I cheated my ass off in high school to get, because I could pick a lock. And that's how I found where they kept the tests to all the different departments. And then I started a business. I would sell those tests. I would trade that for homework. I would do all these things so that I could get out of high school. I got out halfway through my senior year in 1993. From there, I went to Wyoming. Actually, that was 92 when I left to Wyoming, worked in the oil fields, and then came back to graduate, and then started life, right? And I ended up doing the whole mission thing for the church and try and be the type of person that wants to not just live a life of monetary things, but also I think on the spiritual side of stuff. And people really trying to separate spiritual from life. There's a difference between, you look at the Bible, you look at a business book, Bible, Book of Mormon, Quran, Talmud, you name it. They all have some of the best principles ever in history. Why? Because it's about people. How do you deal with people? And if you don't understand those principles, you're going to suck at business. So I'll just leave that there. Now you get into where I went from there. I worked in the oil fields, of course, then into run heavy equipment, drove truck, then ended up in the mines in northern New Mexico. Had a wife and an infant son back in Arizona. I'd be 13 shifts on, 6 shifts off, and I got to spend time with them. But it got to a point where they couldn't draw. It got more expensive to draw the ore out of the ground than what they were getting with the amount of ore they were getting out. So they shut down the project. I had to go find another job. I didn't think that would be very hard. I had a massive resume. And at my age, that young, a lot of energy, I can get a lot of things done. But I kept getting turned down every place I would apply because I was overqualified for every position they offered. They're afraid I was going to go somewhere else. I didn't understand what overqualified meant at the time. I thought it was the stupidest ass word I've ever heard. Well, finally, I broke down to go do a $10 an hour truck driving job. I went in to apply for this. I think there's no way I'm not getting this job. I will do anything right now because we are that broke. I need diapers and I need to pay for rent and I need gas. That's the only things I need to focus on. So I get there, apply, turn down, walk out, wiping tears from my face, 23 years old, climbing in my truck, started up to leave and go to the grocery store where they had to get my diapers, and my gas light comes on in my truck. So then I had to, get my mind right with this whole thing. It's like, I don't know how far to go with this gas. I got to find the closest gas station I can. I found one that had a grocery store next to it. So I pulled in there and I pulled up to the gas pump. I ran my debit card and I said a quick prayer because I knew my account was overdrawn. I just needed 2 gallons of gas. I got a decline. So rifled through my truck, found a few coins, locked the doors. I started walking the parking lot. It took me what felt like a couple of hours, just this is my memory, to gather enough change to get 2 gallons of gas. Now, this is 1997. People still carried change, and you could get gas for 89 cents a gallon, right? So those two things combined made it possible for me to walk a parking lot and get what I need. You can't do that today. So I got my gas. I go in with my coupon, find the diapers. I'm going to check out, and I'm trying to avoid eye contact. I just wanted the hell out of there. I was embarrassed. I was beat up. I was broken. And I was on the verge of just losing my shit. And I heard my name called. So I turned to face a guy I hadn't seen in years. His name was Keith. He used to run the office at a place I ran heavy equipment at. He asked me how things were, and I really just sugarcoated as much as I could. And then he said, "Hey, let's go to dinner." I'm like, I honestly, dude, I'm not in a financial position to go out right now. He goes, "No, I've got a gift certificate to Red Lobster. I'll take you." So he took me and my wife to dinner, and he shared with me about the mortgage industry at that point. So I didn't know anything about mortgages. All I knew is that when you watch TV, there's an old man and an old woman losing their farm to this thing called a mortgage. It was the most negative word I'd ever heard. I wanted to have nothing to do with it, but it was a shot. So I cut a foot off of my hair. I shaved, my mom bought me some business-like clothes. I went and interviewed. I started as a telemarketer in December 1997. And that's how I got started.
Wow. I mean, and it's amazing because, again, I think that you're so suited for what you do now. And I know you've had other challenges in your life, but let's talk a little bit more I want to talk about mortgages, because for those people who are first-time home buyers, I so often, especially right now in the year 2024, I cannot believe how many times I've seen the headlines in the news that a first-time home buyer just can't buy right now. There's just no opportunities for them. And I'm curious on your viewpoint on that.
So there is a lot of missed opportunity out there because of what people's inability to see capability, if you will. The thing I like about the mortgage industry is it's full of a bunch of predators who are lazy as hell. The thing I hate about the mortgage industry is it's full of a bunch of predators that are lazy as hell. Right. So it's both sides. So we have all these people steering a lot of folks the wrong way because it's just, if it's not just a lay down, hand it to you type of deal, there's a lot of guys in my space that just won't do it. We have built our business around the very complicated. And as a result of that, and really, really digging in on that and working on building a team around all that complicated stuff, I'm now ranked, I was in 2022 ranked number 7 in the United States of 1.1 million people that do my job. We were doing an average of over 1,000 transactions a year for the last 5 years. Now, last year was a whole different animal. I still ranked in the top 1.1% or something like that, or 0.05%, but I wasn't number 7 anymore. I was in single digits. I'm like number 40, but still, we're still got a lot done in a really tough year. But what it boils down to is we've had to take the time to put the right people in place to really analyze each individual. Now, I tell people on the baselines, right? You need to have some assets, you need to have some income, you need to have decent credit. You don't have to own homes before to become a real estate investor. In fact, if you've never owned a home before, you're in the best position, period, to become a real estate investor. Because you can literally go into a situation, buy a home that you know would rent well, live in it for a little while, maybe a year, rent it out, do it again with little down instead of the bigger down you need as a real estate investor, and slowly build it that way. But the whole thing of having to buy it with 20% down because you already own a home doesn't maybe not be capable for most folks. The other thing is a lot of people are sitting on money that they don't want to put in the house, and now they can't get their money back out and it's all tied up. So I always encourage everybody, let's look at the infinite banking strategy. Let's look at the whole life policies. I have a good friend of mine who, at the time, in 2015, I just closed like 17 transactions for him and his wife buying investment properties. He was working at the Pentagon. And he was working directly for the chairman of the Joint Chiefs. Prior to that, he was an instructor at the Naval Academy. And before that, he was the captain of the USS Tucson nuclear submarine. A badass guy, right? I'm like, this is the kind of guy you want in your contacts list. Again, one of my driving forces. And then I'd heard he had left the military early to sell life insurance. I thought he was a freaking idiot. So I called him up because every time I think that, just know this, guys, if we're doing business together and I heard you did something that sounds stupid to me, I'm going to ask you why. So I called him up and I said, hey, this is what I heard. Is that right? And he goes, yeah, it's exactly right. I'm like, are you effing stupid? And he cracks up laughing. He goes, I won't answer that question until you get your wife on a video conference call with this. I'm like, done. So birthday weekend, 2016. Yeah, 2016. We're up in a cabin with the family and we had this conversation. I had $90,000 set aside that I was going to buy 3 investment properties. By the time I was done with that conversation, I took that 90 grand and bought a life insurance policy with him. Now, there's a cash value availability on that. You can borrow against like a line of credit. I borrowed 83,000, bought 3 investment properties, took the cash flows from the investment properties plus 10% of my income, started paying back the line again, and then did it again and again and again. I've deployed over $1.2 million out of that account over that period of time. And I have expanded my assets. I've continued to grow the base of my family's wealth. I've got 7 life insurance policies between me and every member of my family. And think about this for a minute. But some people are like, I can do that same thing with my bank account. It's like, well, let's talk about your bank account a minute. You have 90 grand in your bank account. Let's just say it's me. Put 90 grand in my bank account, pulled 82,000 out, bought 3 investment properties, and then died the next day. What does my family have?
Nothing.
They get $7,000, right? And
Yeah,
3 houses.
whatever you spend.
What are they going to do with that?
Right.
But do the other thing. I did the life insurance policy with a $2.7 million death benefit. I've got I got 3 houses now, and I've got an $83,000 loan against the policies. What do they get now? 2.6 million in change and 3 houses, which is the better deal. The other cool thing is that life insurance policy, even though it's going to be slightly negative at first, it's going to build itself up where I get 5% every year it's an average, right? 5% gain every year, tax-free, because it's not my money. It's like I'm borrowing against it all the time. But it still is my money because I can use it and never pay it back. And the other thing of it is as that's growing, and something happens, somebody wants to come after me for my assets, they can't go after that because it belongs to the policy. It's not my money. Right. So there's a lot of options here with this. And each member of my family has it. And if anything happens, that money goes into the family trust. So we as a trust, we buy all the houses in the family trust. My family members rent from the trust. They don't own anything. I don't own anything. It's all in the trust. And so that way we have a better chance of perpetuating the family wealth if we all have policies. We all borrow use the trust to hold our assets, and then when we pass, it goes on to the next group and the next group of beneficiaries. And then when we pass and the death benefit comes in, it goes in to fuel the trust so they can buy more real estate and then buy more real estate and buy more real estate. Because if we don't buy it now, guys, you're not going to get a shot. If you look at statistics last year, the hedge funds, BlackRock, State Street, Vanguard, they bought, and even Jeff Bezos started a damn hedge fund just to buy real estate. They bought 44% of the single families last year. They are on track to control 60% of the single families between now and 2030.
I mean, that is I know you go so fast. That is a number that I think so many people have missed and don't realize what the impact of that's going to be. It's so important. And then a couple of things that you said in there, having a family trust. I think that if understanding that structure and understanding why it's important to have a family trust. And you also said another thing in there of not owning anything in your own name. Those are all really, really valuable. And I know people will ask this question just because when you brought that up, I know this is one of the most common one I get from my clients is, so how do you get a mortgage if there's nothing owned in your name? Which you kind of alluded and you said some of this already, but I want you to spell it out for somebody who doesn't understand the infinity banking.
When you're saying, how do you buy anything if you don't own anything in your name? There's a lot to that question. Because no matter how they have it set up, right? If you don't own anything in your name, you put it all into a trust, you still have control of the asset, right? So even though so I buy everything with the trust. Aaron and I didn't give you guys the name, but I put it in my trust, and the trust goes and takes the contract is in the trust name. I sign
Yes.
as the trustee. We purchase it. I get financing on it as an individual, but it still is in the trust. So it's
Okay.
never does come out of that. So I even go, if there's a lot more crap that I use, I will go into that. But just because the assets, as long as the assets in a living revocable trust, you can use current financing to buy it, period. Nobody's going to stop that. The Garden St. Germain Act protects us from doing this. When you put it in an irrevocable trust, then we can't. So all you're saying with an irrevocable trust is nobody can touch that. Well, no lender's going to give you money on something they can't get. They're not going
Yeah.
to approve you putting in an instrument that they can't access the asset. They're putting the money up for it. Why would they not be able to access the asset? So there's a lot of attorneys start to tell me about how, well, this is why it should be done for my client. Well, piss off. We're not going to lend them the money. You're telling me that everything I give them, they just get to keep? I'm not the federal government. I'm not just giving you shit the way these pricks are right now.
And talk a little bit about the mortgage company that you are working with right now. Do you work for multiple ones or do you have just one?
So one company, Security National Mortgage Company, we do
Okay.
broker and we're a correspondent lender
Right.
and broker for a bunch of other outfits, but we fund our own. We warehouse it, we sell it off because right now trying to hold in this kind of environment, hold and just service the loans
Yeah.
gets rather expensive to do when you could sell it and just have that capital coming in and still rotating through. So if you hold it, you're now holding it, right? If you sell it, you
Right.
can replenish and fund more. So the reason I do that, a lot of tech people will say, Aaron, why don't you start your own company? Because when you start your own company, you now have to handle legal, you have to handle compliance, you have to handle HR. I hate those things. So if I can sell a transaction, take a little piece off the top and give it to these guys to handle legal and HR and compliance, I'm happy. The another driving force for me, I'm invested in a whole bunch of shit. I got stuff everywhere. Is I need to make 100 million or more, 200 or 300 million, so I don't have to fill out another damn paper. That's my FU money. When I get to that point, so I can say, F you, I'm not filling out that form. I don't care. I don't want
Yeah.
to. I'm sick of paperwork. I'm sick of every time I turn around, somebody wants me to complete a document for their records. Done.
I agree. That's one of my pet peeves is all of the things you have to fill out everywhere you go. And so often I put NA, 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 which annoys the daylights out of people. I'm like, you don't need that information. There is no reason whatsoever that you need those details. Anyway, I agree with you. And that's actually a statistic we've seen more than once is that somebody would rather spend a night in jail than fill out the documentation for a mortgage is the one that we've seen the most. And that's because, of course, it can be
Rather
a lot.
spend a night in jail than rather than filling out the paper for mortgage. I didn't mind that though. That makes sense. Because sometimes it feels like you're a night in jail filling out a damn mortgage. Now, here's the difference when you're working with, say, like an outfit like myself. Security National with my team, with a team of 20 people, when they fill out the data, we just recycle the data. We're better recyclers than we are lenders. So that way you're not having to refill it and refill it and refill it and refill it. It can be frustrating to have to do that kind of thing. And so we try and prevent that by building a system in place where you don't have to feel like you're constantly being bothered for information.
Yeah, and that's one of the I've seen deals. In fact, I saw a deal fall apart recently where the investor they had a 1031, which I know you know what that is. And they were about to there's a huge tax implication if they didn't, get this property under contract and done. But their mortgage lender annoyed them so much, and I wish they had let me recommend somebody, but they didn't. Anyway, and by the time they were so fed up with the fact that they'd been asked for not only a lot of times the same documents over and over, but also so many additional documents are like, why didn't you ask me for all of this in the beginning? Like we could have given you all of these documents there, but to just be nitpicking, okay, I need another one. Okay, I need another one. Okay, I need another one. That, again, can be really difficult for somebody.
And it's maddening. So here's how we try and prevent that. So we all know the term underwriter, right?
Right.
Underwriters, usually the person talked about the third week of the deal. You got to close next week. You've been running around for paperwork. You don't have any time to do this crap anymore. And now the underwriter wants this extra stuff.
Yeah.
And like, oh, I got this jerk underwriter wants all this information. Well, it's not the jerk underwriter. It's the loan originator sucked at their job is what the problem was. So what I did is I hired underwriters to do my pre-quals. I don't do a pre-qual anymore. It's none of this full credit, look at a pay stub and look at your application and give you a qualification, turn you loose. No, we put you through hell up front. Why do we do that? Because you can do that when you feel like it. But if
Yeah.
you're got to close in 4 days, and now we're saying, well, all this paperwork,
Yeah.
you don't have time. It's like I'm dealing with the city. I'm dealing with this. I've got stuff going. I got something to do at work. I could have done this 3 weeks ago when I filled out the application before I went into the contract.
Yeah.
Before you put me on a timeline, we do that up front. It's amazing how many times people push back at me and say, Aaron, why do you want all this stuff for just a prequal? I said, would you rather us do that now or wait till you have only 3 days to close and beg for all this shit? Your call. But I'd rather get it all done now, make sure it's 100% ready to go, and you're under zero stress. There's already too much stress to close.
Yeah.
I don't want you on any more stress than was absolutely necessary. And I don't want you spending a single dollar on inspections or appraisals if you don't know for a fact we can get this closed. So that's I spend a lot of money up front ensuring that things are done properly so there is no risk, or at least limited risk, to my buyers.
And I think that is so powerful because most people, and again, you're explaining it to the buyers, because so often, again, that is one of the most heartbreaking things. And even especially after I'm 27 years now in real estate, I am not the one who's going to let someone go out, whether they're a real estate investor, first time home buyer, they're buying their seventh home. It doesn't matter. We're not going out until you've already gone through that process. And I mean the whole process, like what you do, because the worst heartbreaking thing is to write the offer, get it accepted, and then find out, oops, something in your finances or credit or something is going to make it not possible. And that's just too heartbreaking. So
look at this too. Even when that comes up, let's say it comes at the end and it gets solvable. And it is a very solvable thing, but now you're sitting there thinking you've got 3 days to close. We've been at this for a month and a half, and now you got to trust the idiot who missed it at the very beginning to get it right now under pressure.
Right.
Not a lot of people work well under pressure. I am constantly under pressure. That's the only way I work. But it's amazing how many people fold and they disappear and they don't take the calls. And it's like, I hate that when nobody takes my calls and they avoid me because they're doing stupid crap. Like, I have a certain expectation. When somebody tells me we need to get this done, we just get it done.
Yeah.
So when you have the type of person out there that says they make all these promises, but then when they can't fulfill them and then they ghost you, we need to just stop working with those kind of people altogether. Let them go work with each other and just ignore each other's calls. Let's go take this. Anybody who's serious about real estate investing, serious about changing your future, serious about being able to understand where the real value in real estate is. And guys, let me tell you, it's not the interest rates, and it's not cash on cash return. It's a lot deeper than that. Contact us. We'll talk to you about that. And let me tell you, Jennifer, I'm going to share a screen if I can.
Oh yeah, go ahead. Let me give you, there you
right
go.
now,
You got
the
permission.
biggest thing people are talking about is interest rates. When are rates going to go down?
Yeah.
Well, one of the things that we do know, coming into 2024, everybody's anticipating between 6 and 7 rate cuts by the Fed. And we've had 0 so far. Last week, Chairman Powell was on the news. He even said what came out of his mouth, it's highly probable they won't have any rate cuts this year. You know what happened to the market at that point when he said that? We took a beating. So this is the mortgage-backed securities right now. This is what drives interest rates. When these go up, the interest rates go down because it's a flow of capital into the pool. When they go down, the rates go up. This is after he started talking. It just dropped over 100 points in one day. We've been taking this beating. Now, what's really interesting about this graph, and I'll show you even bigger. I'll show you all the way back to 2008. The reason we want to show you all the way back to 2008 here is because this will show you what drove rates down to begin with. So interest rates came down because of what the Federal Reserve did back in 2008. So way back here references where it was pre-crash, pre-2008. This is what the level of volume of money in this pool was, which is very similar to the level of volume of money we are today, meaning the rates were very similar back before 2008. Then the crash happens when everybody lost money investing in mortgages, where everything went to hell. Well, because of that, nobody wanted to put money in the mortgage pools. Nobody wanted to invest there because of the risk associated with it. So Ben Bernanke, chairman of the Fed, Hank Paulson, secretary of the Treasury, came together and said, let's do quantitative easing. We're going to print a shit ton of money from the U.S. Treasury. We're going to give it to the Fed, and the Fed's going to invest into mortgage-backed securities, treasuries, and into corporate bonds. Right here represents the day they announced it. And everybody jumped in. All these people, investors, jumped in behind that. Now, anybody who can't see this, I'm illustrating a line that I drew into the system. I went back to November 2008, the day they announced quantitative easing. I set a marker at that point as to what the value of this security was at that point. When it goes up, it means more money flowed in. So the day they announced it, tons of money flowed in. January 1st, 2009 is the day the Fed started investing into it. Then you see this line here, this orange line. That's the date of the price of it when the Fed started investing. A bunch of people jumped in, took profits, and then they kept going in. This is what references every week's worth of trading for that entire period of time till the end of October 2021. That's when the Fed announced quantitative tightening right here. When they said, we're going to stop investing in the mortgage-backed securities, and look what happened. Bottom fell out. And it continued to fall. And then we broke through the level. This is when a lot of people are asking me, when the rate's going to go back down to the fives? I'm like, they're not. That's something the Fed has to influence. And then I looked back here, and this is somewhere in early 2023, and I'm like, what was the price when they announced this? I was able to go back and draw this line. That's when I figured that out. And I just predicted to everybody, saying, I think we can go below that line, and we're never going to get above it because it just doesn't make sense for us to get above that line. So what do we have here? I'm showing you that line. We came back in October, went to our lowest point in October, come rocketing back when the jobs reports were being a lot more accurate because they've been lying to us about the jobs forever. They're still lying to us. We hit that line, bounced off of it, hit that line, bounced off it, hit that line, bounced off it, and we've headed back down again, meaning rates are going to keep going up. Now, if you look at today, here's an interesting prediction that we have here. I've drawn these channels to show how the traders look at that. The bond traders follow these patterns. They followed these patterns, and it's following the same pattern I drew back here. We fell out of the pattern. We're going to go back into the pattern. So we do our locks based upon the pattern trading and the price action of your bond traders. Now look at this. This is a prediction that I did in February of this year with a day trader. This guy's a professional trader. He came out to my office in Missouri, and we drew out this prediction together. This is when we drew this prediction. It was February of this year, right here where I'm at there, and we went down, we hit the first target, which is what he predicted. Then we hit the second target, which he predicted. We're going to come off of it, come back down, and go back to the third target, come off it, probably hit this final target. That's before we're going to turn around at all. We're going to see rates jump up to back to double digits, more than likely for the real estate investor. So why do I talk about this? Because rates don't matter, people. It's going to be what it's going to be. You need to analyze the deal and make sure the property you buy will stay reasonably rented the entire time you own it, and you can raise rents. And me and Jennifer will do a quick little bit of math with you so you can understand what I'm talking about. You got your calculator ready?
I got it ready. Okay.
Okay. So we're going to say a person's going to buy a $200,000 property, and they're going to put 20% down. How much is 20% of 200,000?
$40,000.
$40,000. And let's say you have $10,000 in total fees, right? Between lender, title, appraisal, taxes, insurance, points, all that crap. I'm not saying that's what it is, but we're going to get really, really conservative here. 10,000. Okay. So that means how much total you're investing in this deal?
$50,000.
$50,000 invested. Okay. But you're putting 20% down. It means you're financing 80%. What is 80% of a $200,000 purchase?
$160,000.
So $160,000 loan, $50,000 invested. Now, the job is what we talked about earlier, is you need to buy something you can keep reasonably rented the entire time you own it. You're going to raise rents and it appreciates. So if you did that, who pays off the $160,000 loan?
Well, then your tenants would, because their rents are actually paying off your mortgage.
The tenants are paying off the mortgage for you. So we take $160,000, which is what the tenants will pay over 30 years, and you divide it by 30. What do you get?
5,333,333.
$5,333.34, basically, right?
Yep.
Well, that is what percentage of 50,000?
Oh, I don't know that. 5,333 divided by 50,000. See, I need a calculator to do this. 0.10, or it's 0.10.
It's actually 10.6.
10.6. Yeah, sorry, I didn't move the decimal point.
If you do that math in your head, 10% of 50,000 is $5,000, right? Well, if it's 5333, it's 10.6%. 10.6% is what you're gaining on your just by somebody else paying off your loan. Where else are you getting 10.6% on your money? You're not. Okay, so we put that aside. You're making 10.6 on your investment there. Now, we live in an inflationary environment. We know that inflation is way higher than what they claim, much higher. So let's say you're looking at the average. You look at Case-Shiller, Black Knight, CoreLogic. They said last year had over a 6 to 7% appreciation rate in the United States. Well, let's just say 2.5%. Your $200,000 purchase went up 2.5%. What is 2.5% of 200,000? Are you ready to calculate? Look at like a gunfighter.
I was gonna say, I don't know if I was fast enough. 0.022 times how much the $200,000 house? That's 4,400. No, I messed it up.
It's 0.025.
0.025 times the $200,000 house. Hold on. I'm fast enough. 5,000. Did I get right?
$5,000. Yep, that's correct.
Yep.
$5,000. So what percentage of your 50,000 is that?
10%.
10%. You need a calculator for that one. So literally just by your house appreciating by 2.5% of its value, you're getting 10% return on your money. You add that to the other to pay off the mortgage, you're at 20.6% with no cash flow. Yeah. That's not even the sexy part. You know, that's awesome, but that's not the sexy part. So we get to raise rents because of what's going on in the world, right? When you start looking at inflation, the average rent's going up about 6 to 7% across the country. We're going to say 3%. Now, let's say you rented this house for $1,800 and you're only making $100 a month cash flow. Every single person will look at that pro forma and say, that sucks. I'm not going to buy it. I'm only getting $100 a month cash flow on $1,800 a month. But you get to raise rents. What's 2.5% of 1,800? Excuse me, 3%. Sorry, 3% of 1,800. So 0.03 divided by 1,800.
It's 0.0001667. Did I do that wrong? I did it wrong.
It was wrong there. Let me see here. That's actually, it's $54. I'll just do the number for it.
Okay, there you go. Thanks.
So 3% of 1,800 is $54. That's not exciting. You're not excited about your income going up by $54. But what's cool about that is your tenant is not freaking out about $54. Yeah. They will gladly sign that new lease. But that just raised your cash flow by 54%. You're getting a double-digit compound growth on your cash flow every time you raise it just by single digits on your total rent. But where it gets sexier is, does the lender get to raise the payment on a 30-year fixed loan because of inflation?
No.
They do not. So when you do the math on today's rates on a $160,000 loan after $1,100 and change payment every month, you're going to pay out $407,000 to the lender in principal and interest. Nobody wants to do that. So everybody's like, oh, I'm going to pay it off early. I'm going to pay extra payments. Don't do that. Never pay extra payments. And the reason why you don't, because the dollar is devaluing so fast, you're actually giving them back less than what you borrowed. You borrowed $160,000 today. You pay back a $407,101 bills over 30 years, but the value of that dollar is shrinking. Before I tell you how much you're actually paying, let me illustrate what I mean. In the 1920s and before, they would mint a $20 gold piece, 1 ounce of gold, with a little bit of other metals for durability. You could walk into a department store and buy a hat, a suit, a tie, a shirt, a belt, a pair of socks, and a pair of shoes for this $20 gold piece. Fast forward to today, 2024. Jennifer, can you walk into a Macy's and buy a decent pair of socks for $20?
No.
No, not even a pair of freaking socks, guys. You can buy shitty socks, but not good ones.
Yeah.
But you can buy everything I just told you with an ounce of gold. Why? Because the ounce of gold is worth over $2,000.
Yeah.
In today's dollars. All those materials cost over $2,000. Why? It's not that they've gone up in value. It's just the instrument we exchange for it has lost that much value. You're not convinced? 1993, I could walk into a Taco Bell because I did this crap. I get 2 bean burritos, 2 tacos, and a drink for $1.99 off their value menu. I drove through a Taco Bell drive-thru with my 17-year-old daughter because I had to drop her off at something. He says, hey, just pull in there. She happened to just order those same things. How much do you think I paid for it?
Probably $10, right?
$15.
Wow.
Did the cost of that crappy food go up? No. What we're buying it with has gone down that much. Yeah. So what that means is, as you're paying back the lender over 30 years, you may have given over $407,100 bills, but the actual tradable value of those $1 bills over that period of time is $154,000. You paid back less than what you borrowed. So what I tell everybody is, you borrow high, you borrow long, and you pay it off slow. you will win every single time playing the long game. If you want to do the short game and try and play these quick things and get these short-term rates and these stuff just going to cash flow great out of the gate, you're going to screw yourself in the long run. Do we know the name Warren Buffett?
Yes.
One of the greatest investors on the planet. He said, and you can look it up, I'm paraphrasing, that the 30-year fixed mortgage is the greatest financial instrument in history because it's a one-way bet. If you missed it and the rates go down, you just refinance. But if you did it right and the rates continue to go up, you've protected yourself against that. A lot of my clients have protected themselves by locking in. Yeah. So now you're not going to be risking that. Now, his partner, Charlie Munger, just recently deceased, last year, February of 2023, I think is when this interview happened. He was on CNBC or MSNBC, one of the two. I think it's Christy Quick he talked to, or one of the other ones, but I think it's Christy Quick. He said that we've experienced 40 years of declining interest rates, and the folks he and his executives over at Berkshire Hathaway believe that we're going to see 40 years of increasing interest rates. What does that tell you? Get in now.
Yeah.
And if for some reason I'm completely freaking wrong, and your other mortgage guy, the idiot that doesn't know anything about anything, is right, into the first time in his life about something, the rates go down to 5.5% without federal involvement. It's going to have to take the Fed's quantitative easing and get there. It's going to take trillions of dollars, guys, and we don't have it. But let's say they do. What do you think the price of houses is going to do? You're going to wish you bought now. Either way, I don't give a damn what happens. Either way, I'm freaking right. And if you don't believe me, I don't care. Because in another year or two from now, we're going to say, I was freaking right. I'm sorry. I don't want to be right about this, but it's the truth. And that's right.
I appreciate it so much. And I know you went through so much of that so fast. I just love. I adore you so much because I think it's so important that people really look at it from a different viewpoint, because there's so many talking, I want to say talking heads or talking points that people say really fast, and you don't have the whole picture. So you're not seeing the full picture and why that someone is telling you something that sounds good, just like, they talk about, the rate is the most important part. And I've heard so many people, and that's all they do is they shop the rate. And I'm like, that's not the most important part of a mortgage. You're missing so much when you start shopping just because of a rate. It absolutely, but I can only teach so much in such a short amount of time. So Aaron, thank you. Thank you. Thank you
for having me on. Thank you. Let me start off for a little bit. And sometimes I need to breathe between words, but it's just, there's so much data and there's so much information. I try and take the highlights of everything and get it out there as quick as I can. So slow it down instead of going. A lot of people like to listen to shit on fast speed anyway. So you can listen to me at normal, or you can slow it down a little bit just to get to a normal speed.
Exactly. And thank you for letting me use my calculator this time. Last time I was a little, oh no, I'm not the one who does math in the head. That's you. You're the numbers expert. So I want to make sure that people know how to get a hold of you. How can they get a hold of you and your team, your amazing team?
Straight to my website, aaronchapman.com. If that doesn't work, Aaron B. Chapman works. You could just Google Aaron Chapman to find the bearded redneck lender. I'm the only one. And also, guys, just freaking text me. I'll give you my personal freaking cell phone, 602-291-3357. Again, 602-291-3357. Shoot me a text. Say, I heard you on Jennifer's podcast. I would love to chat. Shoot that to me. Text me your email address, and I'll make sure the calculator that I use to show you the time value of money goes straight to you, and all the videos on how to use it. I had an app built. I'll give that to you for free. If you're coming through Jennifer's group, just text me and say, hey, send me the app. Here's my email. Let's schedule a time. My assistant, Bree, will send you the email for the app. She will also schedule a time for us to talk about your business.
Well, thank you so much. Thank you. And as you know, I like to end my podcast with that positive yay. So I'm going to ask you to lift your voice and say yay with me as we go off the air. Is that okay?
I can do that for you. Anybody else probably not.
Okay, good. 3, 2, 1.
Yay.
That was perfect. Thank you, Aaron.
Thank you, Jennifer.